Third meeting of the Asia-Europe Political Forum was held under the auspices of Prime Minister Ranil Wickremesinghe this morning.
Representatives from all political parties in Asia and Europe attended the forum today.
We just laid the foundation stone for a refinery, which is basically Indian owned, and a cement plant and LNG plant, which are Sri Lankan owned. So we certainly have not found any difficulties, and we find that we've taken it complimentary, but we finally want this to become the hub of the Indian Ocean. We are looking at ADB and Japan on how to expand the Colombo hub, how to expand the southern port, and then have a northern hub. India is helping us with the Kankasanture ports. So we would like to go ahead and develop it. Then what is our role? In the middle of what is most important for us is to ensure that there is no military conflict and this continues.
Although Prime Minister Ranil Wickremesinghe boasts about new proposed projects almost daily, there is a revelation about the proposed oil refineries in the country. After the first proposed project to construct an oil refinery in Hambantota drowned in a massive allegations of corruption and fraud, Deputy Minister of Development Strategies and International Trade Nalin Bandara said that the government plans to construct a second oil refinery worth $14 billion. The track record of the investor involved in this project as well is anything but clean.
In a report published on Daily Mirror, it was revealed that a Singapore-based company named Sugi Energy International will be investing in this mega project. The company has a history of its shareholders being indicted over massive corruption charges. Foreign media reported the majority shareholder of Sugi Energy International in 2014, Edward Soyayat Jaya, has been indicted in Indonesia over corruption charges against him over the Pertamina pension fund management case. The gravity of the allegations leveled against him are evident as the prosecution in the case has demanded for an 18-year jail term. He was guilty of arranging stock trading transactions with retirement fund managers by investing at PT Sugi Energy shares, the chosen company to invest in the second oil refinery project in Sri Lanka. The corrupt transaction within the Pertamina's pension fund in Indonesia had caused the state a loss of more than $42 million. Parallels can be drawn between corruption at Pertamina's pension fund and the central bank bond scam on a number of levels. Edward Soyayat Jaya is implicated in the alleged corruption practice for the management of Pertamina's pension fund in the fiscal years of 2014 to 15 by investing the assets under management of Sugi Energy stocks. We also reported that Sugi Energy International was registered in the British Virgin Islands back in 2010, which is another place popular for facilitating money laundering and acting as a tax haven. Transparency International Sri Lanka warned that Sri Lanka stands the list of being further labelled as a country with a flat record of countering money laundering and terrorism financing. The international watchdog was prompted into making this statement in the aftermath of the sketchy details being revealed by the government on the proposed oil refinery project in Mirijivila, Hambantota. Raising their concerns on the available data, TISL said the controversy surrounding the proposed $3.85 billion oil refinery could have a negative impact on Sri Lanka's efforts to remove itself from the Financial Action Task Force's grey list of countries vulnerable to money laundering and terrorism financing. On the back of that concern, the government, whilst not being completely out of the woods on the stated Mirijivila transaction, announced details of yet another multi-billion-dollar project with a controversial track record, with the full knowledge of the Financial Action Task Force's team of evaluators arriving in Sri Lanka to further assess anti-money laundering and countering the financing of terrorism in the country. What appears to be an extremely incompetent due diligence process, coupled with an almighty hurry to announce multi-billion-dollar investments, is placing Sri Lanka at a real risk of slipping further down the murky path of nations highlighted as money laundering destinations, resulting in real solid foreign direct investors shying away. One must only recollect the Volkswagen factory saga and of course the central bank treasury bond scam to understand the justifiable fears and doubts on the intentions behind these shady investments.
While the leaders of Sri Lanka are busy branding the island as one of the most corrupt states in the world, other countries who won power with Sri Lanka in the past have strategically upgraded themselves to the status of developed nations. In other words, the world has moved forward while we are lagging behind. Here's a good example. In 1960, both Sri Lanka's and South Korea's per capita GDP stood at 142.2 and 158.2 US dollars respectively. On the other hand, South Korea's per capita GDP had increased by approximately 600% and in less than a decade had reached 6,516 US dollars. By 2000, South Korea's per capita GDP had almost doubled to 11,947 US dollars, while Sri Lanka still lagged behind at 870 US dollars. By 2017, Sri Lanka's per capita GDP stood at 4,065.2 US dollars, which was only 1/7 of South Korea's per capita GDP of 29,742 US dollars. Since the 1960s, South Korea's per capita GDP had increased by 187%, while Sri Lanka's per capita GDP has increased by only 27.46%. While South Korea has made significant strides in its socio-economic march, resulting in a system that is determined to uphold the rule of law and fight corruption, Sri Lanka struggles with endemic corruption and a faltering legal system. Today, this is where Sri Lanka stands. What made the difference?